Over to you, Kevin.
30 minutes, I think, before lunchtime, and I could sense some people have actually gone to have a sneak of what's going to be offered at lunch. So I've got a great panel, and it's interesting that Kura mentioned ROE, return on ego. I was like, my friend, I've got one of the biggest ego. I thought you were trying to hit me under the belt here, but anyway, the great panel here. We've got two founders, I would say developers, operators, being Sakina and Eleni. We've also got, from a architectural perspective as well, we've got Kgalalelo, and then we've got a cost consultant as well, TNT, being Stuart. I think the only one missing on this panel is somebody with the money, because we've got the developer, the person who can do the feasibility, and the master planning as well. So I think for those who were here this morning, we had two interesting presentations by Knight Frank, but also more importantly by Sakina, who unpacked what's happening in residential holistically. Here, obviously, we're talking about ego, branded residential, right? In a market that's growing. So I would kick off with Sakina, because I know you've got the data, you love statistics, right? So in a market which is Kenya, growing population, growing demand for residential, why branded? Why do we need branded residential? Where is that coming from?
I think one of the things, I would say pre-COVID, branded residential might not have had much of a chance in Kenya. But when we look at what changed afterwards in the way that we live and in the way that we work, it opened up an entire segment of people who were looking for residential developments with a lot of lifestyle infrastructure, right? And that's, I would say, the premium end demand. But if you look at the structure of property purchasing in Kenya, it is largely a wealth creation avenue. And so it is largely backed by investors, right? At the moment, the prestige premium that you'll see in branded residences globally is anything between, I mean, the average is about 30 to 35%, but it can go anywhere up to 90%. In Kenya, and the kind of yields that they deliver is about 8 to 10% against their market average of about 2 to 5%. But in Kenya, our service apartment yields that I'm sure Eleni will speak to on service apartments is about 15 to 20% gross yields, right? And so the bar is already quite high in a very yield conscious market. And so for branded residences to come in, prestige alone will not, the ROE on its own is not going to work. Prestige is not going to be your driving factor. And so if the prestige premium is very disconnected from the actual performance of the asset, then you'll find that the market will resist it. So I think, yes, there is a space for branded residences on lifestyle sort of shifts where we are kind of more geographically untethered. But we still have to speak to a very heavily investor yield conscious market where the branded residences are actually providing the same or better performance that they're already getting that everyone else is already getting in the Kenyan market.
Thank you, and I'll stay with you here, but you mentioned something around global versus, I mean, obviously, in certain jurisdictions, if you go to the US, for example, or if you go to the UAE, Dubai, I mean, Dubai was, until lately, was the fastest growing when it comes to branded residences. Are you seeing basically people, that sort of segment, following the global trend, or is it something different that you're seeing in this market?
I mean, we don't have a very big, we don't have a lot of branded residences here at the moment. I think they're projecting that there'll be a threefold increase in Africa and Asia in the next decade. I see it working in areas that have a residential hospitality hybrid, in new areas that are opening up in traditionally hospitality areas like the coast, Nanyuki, Naivasha. So I see that there is a pocket for it here, but I don't think it will be at the speed at which it's happening globally, personally.
Thanks. Eleni, obviously on your side, I mean, you've been operating in this market for quite a number of years, 200 plus units in Nairobi, but also on the coast. Your views about where demand is coming and the rationale of why do we have so much demand coming in?
Demand on supply.
Let's start with demand first.
Okay, let's start with demand. Yes, it's been 9 years now operating in Kenya, right? So what I've seen is that demand has been shifting, definitely has been shifting, but it's there, and it's growing actually. So I have seen, first of all, there's a returning diaspora that is quite prominent, and we've seen a lot of diaspora coming back and wanting to stay in a short or extended stays, premium accommodation. Then we have, of course, the regional business sector that is the driving force, I would say, in Nairobi, growing as well, growing demand there. And of course, number 3, you have a more conscious, design-led leisure traveler who they seek again for a more premium in terms of design focus, experiential living. So that's what I have seen. There is a shift, and the demand is driving towards quality. We talked about quality all morning, but it is quality of service, quality of design, and how do I feel when I stay in that unit? Do I feel at home, basically, or do I feel connected? It's as simple as that and as difficult as that.
And your experience in terms of services, what are sort of services that need to underpin those kind of development?
The services. Well, so first of all, if we connect it to the branded residences that we're talking about, right? My view is that the brand is not just a badge, you know. There is an increase, of course, 30 to 40% globally in the branded residence, etc. Yes, there is a greater yield, but what does that mean in terms of operating standards? Do we have international standards to deliver that story, right? It's a story. Every brand is a story that we try to tell through the hospitality journey, but that hospitality journey, whether we like it or not, is being experienced through the operator. So is the operator at par with the standard? Is the operator, do they have the governance? Do they have the service approach to follow that standard? Then, of course, the services, the concierge, anything that is more personal, anything that is more unique, anything that is more experiential. It's not luxury, it's not anymore, I have a marble bathroom. That was in the 90s. We are over that. Okay, we have marble bathrooms, so what? Right? So what? So what is the experience? I want to feel connected. What does that mean? I want to be greeted by my name. That's standard. That is not a service, paid service. It's how I feel, right? It's do I belong? And is the design of the building and the design of the space make me feel welcome and make me feel connected to the space, to the city or the surroundings, and to the people within? I hope I answered.
No, absolutely. Thank you. And I think it's a good transition. I mean, I know as a panel, we didn't have 17 hours of pre-scripting this panel, but it's a good move to Kgalalelo in terms of, Eleni spoke about design. Obviously, you're at the forefront of design. When we talk about branded residential, we see international brands, obviously, but then we also see local brands or regional brands. So what are you seeing on your side in terms of the latest trends when it comes to designing?
Thank you for that question. So I'm actually quite glad that you did bring in design. because I think the main struggle is that designers and architects are usually brought in after the developers have decided what it is that they want to do. So one of the things as interior architects, we quite, what people don't think we do besides moving around cushions and specking curtains, is that we do extensive research on how people actually utilize a building and how they feel in a building. So we do go through a lot of processes and research on the psychology of space and also psychology of materials and lighting and all of that. So it does factor a lot. So more and more what we're seeing is that developers are bringing in the architects and interior designers quite early on, not just to define the brief, but also for the whole collaboration in understanding what the market is, what people are into as well. So what we've also found, what the trend is but also because of the fact that we're now living in a tech-savvy environment, so there's more what they call like digital nomads moving around, but they still want the experience of a hotel while living in their own space. So they still want a sense of belonging, but they still want the amenities of a hotel. And that is where we have come in to help redefine what that could mean for branded Resi apartments as well. And also post-COVID, we have found that most big developers want flexibility and agility. So it doesn't serve them to just have a hospitality market anymore, but to also think about what will happen if the market shifts to people wanting to live in their buildings for longer periods of time. So even with the building and how we build them and how we design them, we do think about how we can actually change from hospitality to residential without large capital.
And on that, I mean, the next question to you is obviously you've talked about nomads as well, but then also you have multiple generations, for example, right? Whether it's Gen X or Gen Z, for example. So what are the services that you need to have? I mean, at some point in time, I think last year or the year before, on a similar panel, somebody was mentioning about co-working within, because people don't need to stay in the apartment. They can go up or go down, etc. But what else are you seeing lately as new trends in this design?
I think living, working, and being entertained within your building was the trend originally, but people do also want the experience of just stepping out of their building and finding the amenities that they need. We are living in I think the loneliest generation. I think it's been reported for quite a bit. So now Resi apartments is also moving towards how do we get people to actually collaborate more, socialize more, not just work together, but how do they get them to go out of their buildings a little bit more? So you do find that most Resi apartments invest heavily in outdoor spaces and outdoor recreational spaces, just for that reason as well. So in terms of having multi-generational occupants within a building, we have to really think about the back of house as well, because what people, doesn't matter which generation it is, what they take away from staying in the building, it is the experience that they feel, the operational wellness, if you will. So how you enter, what they feel, is there somebody there to greet them? How do they feel within the building? Is it easy for them to get around? Is it easy for them to have their privacy versus collaborating with other people within the building? So all generations require that. All generations need that. And so we have to design, most of the design work and research actually goes back as well, because we have to think about human comfort before we think about how pretty it's going to look at the end.
Interesting, because you mentioned about technology. I'll give you an example, which I sit on the board of a development company, where they're doing a significant development which is branded hospitality residential. And the big discussion of the board currently, because this is a development which will be out 3 or 4 years from now, is future-proofing technology, 5G, 6G, AI, etc. Right? Kgalalelo, again, when you speak to operators, developers, are you seeing that in terms of future-proofing technology where you can speak eventually in 3 years' time, you'll be speaking to Claude or whatever, and your gate will be open, you know, the fridge will be ordering the food for you. Are you seeing that happening or not really yet?
The future proofing we're seeing when we're talking to operators, developers, it's mostly about, as I said, agility of the space more than an individual use of space. So it's about how they can future proof when the economy changes, when there's a new, Lord forbid, but COVID. But it's how do they future proof themselves economically from however the environment is going to be. And I think what most people understand is that what works in Kenya might not necessarily work in Rwanda as well. So that is where engaging the architects and interior designers quite early on as well, whether you're a developer or an investor, it is how do we understand what the next 5 or 10 years in the current environment that we're building, what it's going to look like. And if it does change for whatever reason, how do we make sure that our building is actually agile enough for them to accommodate that? So in terms of technology, it's mostly around safety and security more than about user comfort.
Stuart, I'm going to come to you. Sakina, do you have any thoughts about this in terms of, because I know you love creating new developments, etc. Are you sort of having thoughts about how you bring technology into your future developments?
I think I'd agree in that a lot of that is coming into the safety, security, access part of it and hasn't really translated yet into the experience of living. Yeah.
Great. Stuart, we've had a presentation earlier on, but I think it's a presentation that we see every year. Cost of construction keeps going up, right? We've been talking about, I think Sakina in her presentation earlier talked about, you know, there's a huge market, but we need to make things that become affordable. So your experience when it comes to branded residential, we talked about return on ego. What are you seeing with developers? I mean, are you able to have savvy discussion in terms of how do we smartly bring cost efficiency, or do we basically just live with 20% of increase in construction costs forever?
Yeah, thanks, Kevin. And I think it's quite apt that you've come to the quantity surveyor last, because in a lot of these situations, this is what happens. And we've obviously spoken to the developers and we've spoken to the architects and designers and said, this is what we want. The architects come in and said, this is what you can have. And then someone like myself comes in and goes, no, actually, this is what you can actually have. So it never obviously goes down well. So I think, kind of going to your question is, you talk around cost, and I think sometimes what you have to try and do is frame that to value as opposed to cost, because what something could be up front and what the branded residential or whatever it is requires is probably completely different to what is actually required further down the line when you start to look at OPEX and you're starting to look at assets going and deteriorating for a period of time. So obviously, as I said, you know, the quantity surveyors coming and say, this is what you're actually going to get for your money, but have a think about what you can get for your money further down the line as opposed to thinking about it up front. And that conversation, it doesn't usually go down well, as I said.
But I hear you, because I do understand it. I think it's a legacy between cost consultants and developers and architects, etc. I would have hoped by now, 2026, you guys would have been working in synergy and everything would flow. We know, for example, this year there's a lot of turbulences, etc. What's your radar saying in terms of cost of construction and how that's impacting the developments, especially in the branded residential space?
It's obviously quite fresh at the moment, so the market, I think, is still trying to suss out exactly what that means. But sort of our general principle at the moment is that costs are obviously rising. Things take longer to procure. Programs are going to increase. So I suppose what you've got to do is you've got to take that into account at the moment. So if you are looking to, you know what you're trying to build, you're looking to procure at a point in time, can you get your early leading items at the moment? Can you think about what you can get locally as opposed to consider getting different materials and whatever else from foreign markets where you've obviously got to export it in, which comes with additional costs on shipping, logistics, and etc. So I think probably the easiest trying to do is think about what you've got closer to home in terms of specifications, what you can get, and still get obviously that quality that we can get in the market.
Thanks.
If I could
Sure.
just add to that, I think what he's speaking to is kind of like the value engineering or the value capture that many developers have to get into just sort of to mitigate the cost rises. But there's another part of the equation that's where you look at what kind of value creation can mitigate those costs in a different way. So at the moment, what we are doing to mitigate against these costs is looking at because it's difficult to downgrade your materials, and sometimes it's difficult to change your construction programs or methodologies. It's not very realistic. And so we're looking for locations, areas, concepts that are in high demand, low supply, and therefore you're able to buffer that increase in costs in pricing. And I think in that way you're providing the market with what it's looking for, but not really compromising the quality of what you're delivering.
Yeah, thank you. Thanks. So it's one thing to develop because there's obviously growing demand and post-construction, right? Once it's done, operational stuff, right? Because here we're talking about branded residences, and I think the three of you four talked about providing the services, right? If you're building a hotel, you can go to Radisson or Radisson Blu or JW Marriott and you can sign a management contract and it's their problem to run it. Here, when we talk about branded residences, Sakina, what's been your experience to date in terms of managing post-construction, i.e. managing on an ongoing basis? Are there good operators out there, or do you have to do it yourself? Or is there a gap in the market? Or none of the above?
Okay, this is interesting. The brands that have come to see us, and I'm just going to give you my real world experience. The brands that have come to see us, when we look at the operational costs and how much service is required.
International brands?
Yes. When you look at the servicing costs and the operational costs and even the infrastructure costs of it, so much of it goes into so much of what we see as the gross yield goes into operations, that the net yield ends up being very similar to the service department yields that we have here. And so it wouldn't appeal to the investors that we have, right? At the same time, there is this lifestyle shift that is requiring a residential, a Resi hospitality hybrid. And so a lot of developers are having to kind of do that themselves a little more leanly. We've done it at one of our projects, Anaki, and I think developers often underestimate, what that looks like.
So are you like kind of a glory fancy concierge 24/7?
Yeah, absolutely. We have resident events and everyone hangs out and they all like each other. And it's kind of like real resort living. But I think you can't underestimate how much that takes. And, I don't know that very many developers have that operational, it's a completely different skill set. Yet they're having to do it in order to plug in this lifestyle sort of requirement from from buyers, or rather from the end users, while big brands at the moment are skimming a lot of the return that the investors who are actually would be buying, and so they are the real customer. But the end user is who you need to provide lifestyle for. If the investor is not seeing his returns, you're not going to have funding into the whole system.
But then, which is interesting, so you're saying the end user, because the end user has to pay, because they're looking for that kind of lifestyle.
Yeah, the end user.
But they
will
can't
rent.
afford the, somebody talk about ROE, management on ego, MOE, which is costlier, right?
Yes,
Because there's a cost to it.
yes. So the end user
So they're not
is,
prepared to,
So the end user is super interested in this model. Let's just say that the Resi hospitality hybrid, there's definitely an end user demand, right? But the investor in the middle is there is buying property as a wealth creation vehicle, right? And so if a brand comes in and sweeps off a lot of the gross yield from operational costs, it stops being interesting to them.
interesting. So Eleni, I mean, because you've created your own platform, right?
Yes.
Instead of going for international management companies to come in. So is it worth it?
Yes. Absolutely. So just to add on this conversation, because it's very interesting, yes, is it worth actually having an international brand plus a very good operator into a residential unit that is premium, right? How does it look like?
No.
But now I'm not. Okay. How does that look like for the investor? Whether that is the developer who is holding the asset or the buyer who is the end buyer, right? And what are they taking home? As Sakina said, how are those margins? Are they literally squeezing the profit from the investor? Which is something we don't have the answer right now. It's part of our feasibility study. It's part of the asset, the location, the operator. Are they able to bring in the standards, right? But it's just a question, food for thought, to have out there, because at the end of the day, all these different layers of branding and management are a cost to the actual owner of the developer. So it really has to make sense. That's all I'm saying.
But Eleni, I mean, in that, let's say the branding, for example, right? You can go for an international brand because maybe the ego of those who want to stay there is, it depends on how big the ego is.
Sure.
But then more importantly, when it comes to the operational, i.e. you need to deliver a service to the residents.
Yes, absolutely.
Do you have decent operators today who understands the intricacies of being there 24/7, 365?
I would say that it takes many components to be able to be international in terms of standards, localized in terms of understanding the culture, to have the governance for the international institutions. All of that is like, it's a 3 layers that they need to happen at the same time, not 2 out of 3. So I think, yeah, there are great operators out there. It's just not as easy as it sounds. I go in and I operate an international brand. No, because it's not just I am in Dubai. It will fail, right? Dubai design, it will fail. It needs to be whatever we do here, it needs to be hyper-localized, right? But it has to maintain an international standard. And there needs to be a governance component and transparency in terms of the actual operations, how you set up your costs, how you set up your efficiencies, what's your ADR. So if those 3 are married together, and I think they are in some operators here, right? Then you're good to go.
Thank you. Kura, you're staring at me because there's only 30 seconds left.
No, you don't agree?
Maybe I can take one quick question from, if there is. No question? Not even about the menu? No? Okay. Great. Oh, there is. Okay, there we go.
Hello. Hi, everyone. Faye from Rika. Thank you so much for your discussion. We talked a lot about international brands coming in. What about local brands? Is there an opportunity to create a regional brand that speaks to a lot of things? I think, Eleni, you touched on the local context. Is there an opportunity for that you guys have seen local branded residences?
Eleni and then Sakina, because you are the forefront in terms of local brands.
I can go.
Local
I can
opportunities
go
for local brands. yeah.
first. Oh,
You mean the creation
Made
of a
in
local
Kenya.
brand? The creation of a local brand? Oh yeah, absolutely. I think from my perspective, I think if a brand is able to leanly operate and still provide that experience and be able to replicate scalably across a number of developments, then it would work. I think the only issue is that we have had local branded residences before with kind of rental pool investment vehicles, which haven't gone down so well, and so they would really have to build trust in this market before they're able to fully scale.
Eleni, anything to add?
yes, thank you. Yes, to your point, there have been some examples. This full kind of like, again, the governance and the transparency, very important. I think there is definitely, there are some hyper-local African brands out there, actually, that they're doing so well. And in Kenya, we're yet to see one, and I think there is a space for that, definitely.
Fantastic. I think we've reached the end, if I'm not mistaken. Right. Big applause for our panel. And for those who've got huge ROE, you know where you need to stay at Eleni's or Sakina's future development. Thank you, everyone.